What's going on, guys? My name is Richard and welcome back to another video. Today we're going to be talking about Net or Cloudflare Inc., which is my stock of the week, and we'll be covering what this company actually does by checking out its website and a few different articles. Then we'll head over to MarketSmith, which is sponsoring this video, analyze its earnings and sales growth, IBD ratings, fund ownership, RS line, and then finally we'll head over to TC2000 and analyze a huge breakout that it had this week. And if you did, in fact, miss this initial run-up, don't stress. Don't try to enter extended at this time. It's too high risk. If this is the start of a multi-month or even multi-year uptrend, there will be a ton of other opportunities, pullbacks to moving averages, new bases that form. So don't try to enter extended at this time. But we'll talk about all of that later on in the video. And if you do enjoy my analysis, please go ahead and leave a like down below. It really helps me out and my channel. And subscribe if you want to see more videos like this every single week. And with that said, let's head over to their website and talk about what Cloudflare actually does. And essentially, they are a cloud-based security company that provides their services to other companies to protect their online presence. And they actually have a handy page right here that talks about a little bit about what they protect against. So data leaks, bots, DDoS attacks, and I'm not an expert in this by any means, but their platform seems very comprehensive, and it really seems like a bunch of small and medium-sized businesses are really using their services a ton. And why would a company pay for this? Why don't they just use a regular firewall or something like that? Well, the cost of potential data breaches is just too much for these small companies. And if you go to this article right here, which will be linked in the description, you can see that the average cost of a data breach is $8.19 million. And for a lot of small companies, that basically is bankruptcy. They can't support that kind of risk. And so they'll pay companies like Cloudflare to protect their networks. And Cloudflare also has a ton of different products, which I don't know much about personally, but they also have a Cloudflare for Enterprise, where they've got a ton of different features, integrated security and performance, data analytics, all those things that a company might need. So that is a little bit about their website. And I also want to talk about two different articles, one from Seeking Alpha and one from The Motley Fool. So this is barely an article actually, but it's just a brief blurb that they posted yesterday. And basically Morgan Stanley upgraded Cloudflare. They increased their price target to $34. It's a little bit over that at this point. But analysts are always behind the price, especially in these big growth companies. But also, as I said, Net's exposure to small and mid-sized businesses should be a core asset. That's a good sign. And overall, because of the current situation with COVID-19, more and more companies will be shifting to the cloud and using services like Cloudflare. And also in the Motley Fool article, this was written a while ago on May 10th, but it also gives just kind of a good background about the company and kind of how it positions itself and also the financials. So in Q1 2020, you can see that revenue was up quite a bit, up 48%, but they still aren't profitable. You can see a 12.3 million loss, although it is much less than in 2019. But to delve more into the fundamentals, let's head over to MarketSmith. All right, so diving into the fundamentals, first things first, I always look at the earnings and sales reports, and I can see that they are not yet profitable, but they have very solid sales growth over the past few quarters. And in my podcast with Patrick Walker yesterday, which you should definitely check out if you haven't seen it yet, it'll be linked above. He basically said that he either looks for 40% earnings growth or sales growth. So this ticks one of those boxes. And for an IPO, I think these are pretty strong numbers. And overall, you can see they are not yet supposed to be profitable in 2020 or 2021. Their EPS rating is a 22. The group RS is an A+. That's great. Their SMR rating is a D. Accumulation distribution is an A. That's very strong. And their overall composite rating is an 88. So overall, decent fundamentals. Not the greatest earnings or EPS rating, but overall, still pretty strong. And taking a look at their fund ownership, let's go to this tab right here. You can see a nice increasing trend in the number of funds. So there's more and more funds buying this stock. You always want to be aligning your purchases with the big and smart money. And you can see that they also have 3 high quality funds investing as well. So I always feel better when I see a bunch of these funds investing in the same companies that I'm looking at. So that's pretty much it for the earnings and fund ownership. And taking a look at the chart, you can see it just emerged from this 30.78 pivot on this past Monday. And right before that, the RS line was going in the right direction, basically straight upwards recently. And that's exactly what you want to see on a breakout. You really want to see that RS line jumping up as vertical as it can get. And the RS rating overall is a 96. That's very strong. So overall, a very strong breakout on high volume. You can see it was the largest volume since the base. So pretty much a textbook breakout. And I actually did buy it on this Monday and bought a little bit more on the next day. And then it's moved up well towards the end of this week. Although it is stalling a little bit today with the overall market pulling back slightly. But overall, just going to a weekly, it's a very strong chart pattern, a huge breakout on huge volume. Really textbook, as I said. And overall, the up-down volume ratio is 1.8. That's great. That's signs of accumulation, but you don't have return on equity, and you've got a negative cash flow, which are negatives. But overall, the chart for me is very, very strong. So if you missed this initial breakout, you might be asking yourself, how do I find a low risk setup? Because right now, for me, this is extended. It's very high risk to enter right here, as it is above the Bollinger Bands and is very extended on the weekly as well. And I will be expecting this to back and fill a little bit. Let's bring up ZS right here, which had a similar huge breakout on earnings. And you can see it kind of went sideways for 2 weeks actually before starting to move up once again. So after a strong breakout, I do expect some consolidation. And actually that is constructive because the sellers are getting out of it and the institutions are accumulating even more shares. And you don't want to see it back and fill too much. You can see it stayed above the kind of low of this day. So that's kind of what I expect to happen with net. And another recent example is Chegg, which actually had more of a back and fill, and it kind of lasted almost a month, but still it stayed above the low of the breakout day. And for net, I would take it as a warning sign if it breaks below right here. And probably I won't give it that much room if it consolidates too much. But overall, it will form another base, so don't worry about that. It's a very young stock, a recent IPO. And if this is the start of a multi-year, multi-month move, it will form a stage 2 base, and that will be constructive because it will shake out even more weak hands, and more funds will jump into the stock. So don't rush to go in right now if you missed it. You have to recognize that right now it's too extended. Put it on your watch list. Keep watching it day to day and watch to see if it forms another base and a new low risk entry. And if it does, in fact, kind of take a break, form a little bit of a shelf here, some possible entry points would be on a green dot, a 10-4-4 stochastic cross, a bounce off a lower Bollinger Band if it gets pretty tight up here, or eventually a break above this high. So if, for instance, it dropped down here, stayed above this low right here, nice and tight for a couple days, maybe formed an inside week next week, you could buy it once it breaks through the downward trend line and moves up once again on above average volume. And for me, during that consolidation period, if it does happen, it would be constructive if it's on lower volume than this breakout. And you want to see really that volume evaporate towards the bottom of that pullback. And then a good sign, if you are going to buy in as it starts moving up, is a pickup on above average volume. And overall, I do think that a consolidation would be constructive. Let these moving averages catch up and support the stock. And then it would be ready for another move upwards. But that's pretty much it for net. Thank you guys so much for watching. If you did enjoy, please go ahead and leave a like down below. And if you have any questions or comments, just let me know in the comment section as well. But thanks again for watching. I hope you guys have a great rest of your weekend. And I'll see you guys in future videos.